Alright everyone, so I have updated this video for a couple of reasons. One being that it seems to be a little confusing for some people to trade it. So I'm trying to take my time as much as I can explaining each model, hopefully making the examples a little more clear. And another thing is, visibly it wasn't the best. The chart colors are too dark, and I've noticed that when recording it's better to use brighter colors and a brighter background, so that's why you've been seeing me use different chart colors on my videos. So that's I think that's a bigger reason as to why it was harder. And I think I was adding a little bit too much information. I should have kept it a little more simpler. So hopefully with this more revised version, and now that I've come out with a few more instructional videos, it'll be easier to implement into this. So now that I have explained all that, let's begin with the actual trading plans themselves. Alright, so for this example, I'm going to start off with Euro USD, and this is for trading model number 1. Now, obviously we have to go over some rules real quick. Risk per trade, for non-funded it's 1%, for the funded account it's 0.5%. The time frames we're going to be using are the 4-hour and 15-minute. The pairs, Euro USD and GBP USD. There's a few others that I would like to try, but I haven't put much thought into it just yet. But I will let you guys know how they go once I have done all the back testing. Kill zones, we're only going to be using New York kill zones, but if you're a London session trader, you can try out using the London sessions. In theory it should work, right, in your London session kill zones in theory, but I've only been testing it on the New York sessions because I only trade the New York session, right? But let me know how it goes. So for step number 1, align your time frames, and then you continue to trade in your mapped out range, and remember to mark out your POIs. Now guys, marking out your points of interest is very important. Why? Because it can also help frame the narrative for the day, and it can also give you your draw on liquidity. So when you mark out your POIs, I also would like for you to mark out your fair value gaps, or areas where price has already tapped into it. So if we were to go on like versus a higher time frame, this right here would be an entire fair value gap, right? That right there. And as you can see, I already started marking up some of my ranges here because the overall trend was actually, well, as you can see, it's kind of bullish. So I also want you to mark out your type 1 and type 2 structures here. So break of structure, if you don't know what type 1 and type 2 structure means, look at my intermediate to advanced market structure video. It'll answer all the questions. Oh, and yes guys, you can use my advanced candlestick theory on all of my models. You can apply it on there, and I'm pretty sure you'll have a lot easier time trading with it. I might show you guys how you could implement it, but first let me get over through the main model itself. So we have our ranges here. Obviously we're already with the understanding that it's bullish, so we have price reacting off of here. We have another POI here, or fair value gap here, that if we were to go on a higher time frame, that would be a higher time fair value gap. We have what looks like to be a demand zone here. Okay, perfect. Price did not tap into anywhere else. Let me mark up this right here as my range. And another thing guys, price doesn't have to type into a demand zone like versus here. As you can see, price didn't tap into a demand zone here on the higher time frame, but it was in an area of discount. Once price entered this area of discount, anywhere below the 50, you can start looking for reasons to start buying. Okay, now as you see, we're bullish, right? The overall trend says we're bullish. Our mapped out ranges says we're bullish. And when you're looking for bullish setups and you see that currently price is going down, and you're wondering, okay, well, how should I look for my bullish setups? Very easy. Wait for price to enter or slightly tap into the 50% or just the area of discount, and wait for just one rejection towards the opposite end. In this case, we're seeing it here, right? That is one way that you can do it. Another way is for you to wait for like a break of structure or more candlestick momentum, right? So if you want, you could wait for a break of structure on here, right? Or you could just wait for more candlestick bullish momentum. Okay, but that's up to you. And now that we see that we have some rejection, we're going to drop down to the 15-minute. And what does the second rule say? Once your POIs are marked up, drop down to the 15-minute, mark up anything important on your chart, or refine your POIs. You don't have to refine if you don't want to. And then look for a sweep of liquidity near or at your supply/demand zones. That can happen inside or outside the kill zone hours, 7 a.m. to 10 a.m. EST. And this is actually the current time zone I'm using, UTC, right here. But yeah, or it's just 7 a.m. to 10 a.m. New York time. All right, so now I'm going to turn on my kill zones. All right, so as you can see, we are in the fair value gap, and I'm simply going to look for a kill zone that matches up with anything important. So we're just going to wait for that kill zone to come up. I'm going to let price play out a little bit, so that way it's easier for me to give you the example here. All right, so what do we have here? Price reacted off of this zone. So the demand zone has already been tapped into. Another zone here, or you can even just look at them as order blocks, has been tapped into here. And then what do we have here? Another one has been tapped into here. And yes guys, this is all in hindsight. I am only doing it in hindsight so we don't waste so much time on this, okay? I'm trying to explain this as best as I possibly can. Now, once we mark up our zones, we wait for confirmation on the 15-minute time frame using any of the entry confirmations you like. I prefer the candlestick patterns, specifically the engulfing candlestick, but you can use whatever you guys want. Now, in this case, we're looking at the 15-minute, and we've already established that we're bullish, and we've already seen that price has been reacting pretty well off of these order blocks or demand zones. And since this is our kill zone time, we can look for the confirmation that you want to use. Me personally, I've been getting into limit orders a little more lately just because I've been getting some really nice profits with it, but it's up to you. But for this example, I'm just going to use limit orders because I know that's what everybody loves using. I know it. So a limit order would have been perfect here, and the sweep actually happened right here. It's a small sweep, I know, but we did have a sweep. This is like a fractal low. That low was swept. Price tapped into our order block, and you could have gone for like a fixed 2R, or you could have just targeted this small high. You could have actively trailed your stop loss. I've already shown you guys a video on how to do that, but like I said, you could have just gone for a 2R. Just go for whatever POIs I've mentioned in the series. Oh, let me start with number 4. Once you enter, put your stop loss below/above your zone or swing point and target either an imbalance or negative liquidity. Doesn't matter. If it's beyond the 4-hour highs/lows, it's up to whatever you want to target. So sometimes starting off, it's better to just go for a fixed RR. Again, you could have just targeted for this little high right here. Up to you. And if you guys want, you can also make sure that your stop loss isn't so big under a certain amount of pips. You can keep it at a certain pip range. That's also up to you. Now, for those of you wondering, how can you use the open daily line or the advanced candlestick theory for this? Real simple. Real simple. Remember guys, I've talked to you guys and I've told you what the theory is about. Once we have that open, the daily open here, and you see that price has already manipulated, and as you can see, price already manipulated here during the day, and we're moving towards the upside now. Once the manipulation is over and your kill zone is over, in this case it should be over the daily open. You can also use it as a confirmation tool. Obviously, for bearish examples, you want to make sure that your kill zone is under the daily open. But yeah, you can use that. So real quick, let's go over this example again. Higher time frame, we've established. Oh, hold on, there's too much crap going on here. Okay, so higher time frame. We've already established that we're bullish, right? We marked up our ranges, breaks of structure here, mapped out our range again. Price came down to a discount, went up. Marked out our range again, our recent range, price came down, waited for a rejection to say or give us some kind of indication that we're going back up so we can start looking for buys on the lower time frame. Price tapped into a fair value gap, perfectly rejected, dropped down to the 15-minute, marked up some more zones. Here we have our order block marked up, price taps into it, cool, comes back up, comes down, price taps into this order block, price comes up, goes down, and we are already in our kill zone. Price sweeps some liquidity, comes down here, tapped into our order block, enter limit order style, come back up. Now, if you guys did want to enter off of the first candlestick rejection, and you guys see that this high would have given you a negative risk to reward, right? If you would have targeted this high, then I would still recommend you go for just a 2R then. 2R, or you could go for like a 1 to 5 or a 1 to 1. Maybe a 1 to 1 would be safer. Again, it's up to you. Now, a few things. Yes, you can trade with this strategy during news, but it will affect your win rate significantly if you're not ready. Another thing, when trading with the trend, it is not absolutely 100% necessary that liquidity must be present or it must be swept. I've been recently changing my opinion on that, and that's why I'm telling you this, because it seems that regardless if you're trading with the trend, then it shouldn't really matter to have that specific confluence as much, because we're following the trend. So I don't see why we need to restrict ourselves so much. But if you do want to be safe, then yes, add liquidity, make sure it was swept, make sure you're looking for all those things. Now I'm going to give you another example, and it's going to be for a bearish setup. All right, so let's move on. All right, so we have our next example on GBP USD. Now, same thing here. Number one, align your time frames, and then you continue to trade in your mapped out range, and remember to mark out your POIs. All right, so let's see here. We have our breaks of structure towards the upside, so we're pretty bullish on type 1 structure, and I would have marked out this type 2 structure here like that, but I don't want to do it for all of them because, to be honest, it would have just taken me too long. So that's just an example how you can mark up type 2 structure here. So anyways, I mapped this one out as well. Map this out, and what do you see here? I'm going to delete this because it's in the way. Sorry guys. What can we see here? We have a change of character, and then we have a break of structure confirming this change of character. So now I'm actually bearish, even though the overall trend is bullish. Now, you guys, you could say I'm sort of counter trend trading in a sense, but I'm counter trend trading against type 1 structure, not type 2 structure. I'm still following type 2 structure, but this is what I'm going to do. I am going to mark up this zone here as just a target. Why? Because I don't actually know when type 1 structure will actually change from bearish to bullish. As far as I can tell, we can do it at any moment, but it hasn't even done it here. So for all I know, this candlestick here is just simply a reaction towards a fair value gap here, like a little speed bump. So until we get some breaks of structure towards the upside on the higher time frame with type 1 structure, I'm still bearish. So now we're going to drop down to the 15, and again, number 2, once your POs are marked up, drop down to the 15, mark up anything important on your chart, blah 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 blah. You already know, y'all already gone through this. So let's see, I'm gonna let price play out again, obviously cherry picking. Let's see here. Okay, so what do we see here? Chain reaction of demand zones or order blocks, whatever you want to call it. Price reacted there. I'm more inclined to use this one as the order block. It just engulfed all of these, so we can use that as the order block. Now, this is actually the reason why I chose this example is because I know a lot of you guys are probably wondering, what if I entered outside of the kill zone? Let's say you wanted to enter on this candle. Yes and no, it's up to you. The data on this is mixed. I mean, I guess you could enter outside of the kill zone, but I would much rather you stick to the rules, okay? Just stick to the rules. If you would have entered here, you would have been fine. All right. So anyways, let's just say you did enter here after price had swept liquidity right here. Actually, that was the first sweep. Okay, that was the first sweep here, and then price swept it again here. So price swept liquidity, tapped into your demand zone or order block, or I mean, so this because it would actually be supply zone. Why was I saying demand? Sorry guys, I have a lot on my mind. Okay, so anyways, supply zones. Once price taps into these supply zones, we're good to go. You can target this set of liquidity here or here. It's up to you. But that is in essence how you could trade this strategy. You can use any of the confirmations you want. It's up to you. Just make sure you're entering during the kill zone hours, okay? Try not to be super aggressive with the confirmations, but backtest, okay? Backtest anything that you do, anything that you change. Backtest, backtest, backtest. All right, so now on to the second model. All right, so for this example, we'll be using US 30. So let's go over the parameters. Risk per trade. For non-funded accounts, you will use 1.2% max. Minimum, you can go for 1%, right? For funded accounts, max is 1% of your risk per trade, right? Your time frames are going to be the 4 hour, 15-minute, and then for your entries, you can use the 5-minute or the 1-minute. Now the pairs I recommend you using this on is Euro USD, AUD USD, US30. Kill zones are not required, but you can use them for higher probability setups. And yes, you can trade this any session. Now for the first rule first set of instructions is find the direction of the trend and mark your POIs on the 4-hour and wait for price to tap into it. So for example, you can already see here that we're bullish on type 1 structure. Now when I say find the direction of the trend and mark your POIs on the 4-hour and waiting for price to tap into it, I'm talking about something like this. You would mark up, for instance, like a demand zone or an order block, and then wait for price on the higher time frame to tap into it and give you a reaction off of it, like this, right? Price came down, tapped into it, and reacted off of it. Price came down to this order block, came down, reacted off of it. Now we're going back up, and as you can see here, price tapped into this order block and then continued moving up. They didn't even bother retracing down here anywhere else. Okay, so now we're going to drop down to the 15-minute. Okay, so now that we're here on the 15-minute, I marked up this 15-minute order block here, and as you can see, price came down, reacted off of it. And then what does number 2 say? Number 2 says drop down to the 15-minute and look for signs of a change of character. We have the change of character here. Then we'll drop down to the 5-minute or 1-minute time frame where you will enter with a market structure shift at or near a supply/demand area or your preferred method of entry. So we're gonna drop down to let's drop down to the 1-minute. Okay, so I'm on the 1-minute. I marked up this order block because that's where price reacted off of, and I'm gonna look for a simple market structure shift. It doesn't have to be a market structure shift. You could have just entered off of a limit order, but this is a market structure shift. Some people know it as a change of character. You can enter right off of that change of character. Set your stop loss down here, target this area of liquidity, but that would only give us barely a 1-to-1. You can go for a fixed 1-to-5 or 2R. There, that could have been it right here. Or you could wait for a change of character or a market structure shift, however you want to call it, and then wait for a retracement into a fair value gap. That is probably the safest way to do it. Once it retraces into the fair value gap, give a sec. Sorry, I accidentally clicked the wrong button. Once it retraces into that fair value gap and then rejects off of it, then you can enter here. You can either put your stop loss under here or under the fair value gap, or you can put it under this small low. And you can also target that high here, or again go for a fixed 2R, target a fair value gap that is nearby, or whatever point of interest it is that you want, right? Something like that. Okay, pretty cool. Now I'm going to show you guys another example for this model, and then we'll move on to the next one. Alright, so for this example, we have AUD USD. First things first, we have to find the direction of the trend and mark your POIs on the 4-hour and wait for price to tap into it. So we already did that, right? And as you can see, price is actually ranging a little bit. So how do we trade under these conditions? Well, very easy. All you have to do is just follow price action in its order. So what do we have here? Price fails to displace or break over this high right here. So what does price do next? Comes down, taps into our demand zone, but doesn't break through it. So once we start going up, all the way up, we see there's a break of structure. Finally, a break of structure towards the upside. Then what does price do? Come down, retrace, and then finally taps into an order block. So we see that it taps into this one. So we just mark that one up. Taps into this order block. We have this change of character, a small fractal change of character that gets confirmed by this break of structure. So what do? We go down to the 15-minute. Okay, so now that we're in the 15-minute, I marked up this small little break of structure because you don't actually need a change of character now that we've confirmed that we're already moving towards the upside or in the direction of the trend. So obviously, all you would need now is that simple break of structure here, right? Break of structure, comes down, taps into our demand zone. And if we were to go down to the 1-minute, after price taps into our demand zone, what can we do? You could either enter off of this one, target to this high here, or enter off of the second tap into this demand zone. And you could have entered off of the market structure shift, which would have been this one right here, and set your stop loss under the 15-minute order block, or you could have refined it if you wanted to and just tapped or looked for targeting those highs right there. Or again, you could have actively trailed it. It's up to you. So it's okay if price taps into your order block twice, it's fine. Either way, like I said guys, this right here could have been an area of liquidity you could have targeted, or once you saw that second re-entry, you could have just targeted this area right here as well. Okay, it's up to you guys. But that is in essence how you would trade my model 2. Now this is obviously a more advanced model. I don't recommend you trading anything that involves a fairly advanced model like this, especially if you're new. Stick to the 15-minute, and if you want just to add more confirmation, use my advanced candlestick theory video and apply it to this as well. All right, so now let's move on to my last trading model, which is even more advanced. So if you're not an experienced trader, please stay away from it. Okay, let's move on. All right, everyone, so for this example, we've got GJ. Now let's go over the parameters real quick. So risk per trade, non-funded accounts 1% max, for funded accounts 1% max. Reason being is because this strategy is so hard to master, and the win rate is like 40% win rate. So you have to be extremely careful, guys. Really careful. Risk management is key for this one. So for the time frames for our bias, we will be using either the 4-hour or the 1-hour. In this case, I'm just going to use the 1-hour. I've given you enough examples on the 4-hour, so I want to show you guys how to trade it with the 1-hour. Now our time frames for finding our entries, you will be using the 15-minute time frame, and then we'll drop down to the 1-minute time frame. The pairs you can use is a UDUSD, EURUSD, and GBP JPY. Kill zones are not required, but again, if you do use kill zones, they make them even higher probability. Now, the sessions that this works on is on London and New York session. Please don't try this on Asia session. It's probably going to be a little more difficult. So just stick to the London and New York session. All right, so as you can see here, we have multiple breaks of structure towards the downside. So I marked up a POI from where price is already reacting off of. Now it says here to find the direction of the trend on the 4-hour or 1-hour. Next, it says drop down to the 15-minute and look for your supply/demand zones. Okay, so now that we're on the 15-minute, I will refine this order block to something a little bit more smaller. So I would say this actually would be an even better order block. Okay. So I refined it to the 15-minute, and I'm going to drop down to the 1-minute and see where I could have entered with a market structure shift. So price swept some liquidity, came down, finally back through this order block, and the market structure shift that I was looking for was right here. Or again, some of you know it as a change of character. You could have entered off of that change of character here. So your stop loss over that order block, and you could have targeted whatever liquidity you wanted. Could have been this area right here, or you could have just targeted a fair value gap, or this area right here. We'll see if price would have tapped into it. If not, it's fine. And yes, guys, remember, you after 1 to 2, you do have to move your stop loss to break even. Okay, move it to break even, and again, you could have just targeted maybe this area right here. But by then, we would have been safe because we have a break even already set. So it would have been perfectly fine. Wouldn't have been anything to worry about because, again, since this strategy is so hard to master, risk management is extremely important. So as soon as price goes into profit into your 1 to 2, please don't get greedy. Don't be dumb. This is something you do have to actively manage until you feel comfortable modifying it or doing something else with it. But yeah, you are going to have to at least take 300 trades just to get used to the psychology that comes to it as well, because that's the biggest part of trading here. The psychology aspect to it, man, it is mentally tough on you. Mentally tough on you, especially if you're not used to trading like this, getting stopped out all the time, getting stopped out at break even. If you haven't added enough chart time, it is going to be incredibly difficult. That is why I recommend that you just stay away from the 1 minute, stay away from the 5 minute. unless you're trading like a specific ICT strategy, then maybe. But other than that, man, I really don't want you guys trading these really advanced models until you get used to trading on like a more higher time frame, like the 15-minute or higher. Just don't go for anything like this just yet, you guys, because this will discourage you very quickly, and you're going to think that trading is not for you, or that trading is a scam, whatever the case may be. And another thing, don't go for these ridiculous risk to reward ratios like a 4R. You don't have to do all that, guys. You really don't have to, because you're exposing yourself to a lot more risk, and it's just unnecessary. Now, if you guys don't like these supply and demand models and you think it's too difficult, don't worry. I have a lot more strategies coming out that I've back tested. I've been back testing aside from producing content, so you will get strategies that are a lot more easier to use and to manage, as opposed to just trading strict supply and demand. Okay, so other than that, guys, that's all I have for you. I don't want to add another example because I'm afraid I'm really trying to discourage you, to be honest. I'm trying to discourage you from trading this model. That's why I don't want to give you another example. I don't want you trading this model at all. The only reason why I added this is because I wanted to show you guys how I used to trade this model, but it's extremely tough. I wanted to show you that reality, that it's extremely tough. It's not easy at all. All right, so aside from that, ladies and gents, you can take a look at the indicators that are listed down below. As a matter of fact, let me transition into that right now. So here are the indicators that I recommend you guys use if you do trade my supply and demand models or anything at all. You can also pair this up with your supply and demand models as well. Maybe you'll get something a little better than I do. Who knows? Let me know, guys. Let me know if this video was a little bit better. If there's anything I could have added or done, please let me know in the comments down below, and I'll do my best to add it on here as well. And here is a quick FAQ that I have. So what if I have more than one POI? So just look up how to identify high probability order blocks on my channel. I also have my advanced candlestick theory video, when to move your stop loss to break even and how to proactively trail it. I mean, I have a bunch of good stuff, guys, that you can use to help you out with identifying POIs. All right, so that's where knowing how to tell if price is reacting from your zone with momentum comes into play. If you see prices moving quickly from one of your zones, then you should be ready to enter. Keep in mind, you will never be 100% right, but over time you will get better at knowing when to enter and when to not. Furthermore, you can always use your fib tool to choose the zones you like. Next, what is generally recommended to do when opening up my charts? Generally, it's always good to do a top-down analysis from the weekly down to the daily, and then from there, do what your trading plan tells you. But it's up to you and what you see works. So please, ladies and gents, do a top-down analysis. Start from the weekly, drop down to the daily, 4-hour, whatever the case may be. Whatever you have seen works, and just get an overall bias for the day. And then you would follow my trading plans, or if you want to stick to what my trading plan tells you, it's up to you. But I would like for you to get some good chart time in and mark up your charts. All right, next, generally, what is recommended risking per trade? Honestly, it depends on many things like psychology, risk to reward, strike rate, etc. But if you're a beginner, no more than 1%. Please, if you are just now learning how to trade supply and demand, no more than 1%, ladies and gents, please, no more than 1%. If you're going to trade with any of my models or my specific supply and demand models, out of the 1 through 3 models, I would recommend sticking to model number 1. It is my favorite model to trade. I recommend you stick to it. And if you want, you can also add ACT to it. Okay. Next, when should I refine my zones? Usually you do it if the zone is way too big. But sometimes when you drop down to the lower time frames, for example, the 15-minute, you'll see price won't touch your refined zone and instead react off of your original zone, which was the bigger zone. So just be careful not to refine too much or refining at all. Again, backtest, see what works best for the pair that you're trading in, because sometimes it is worth refining. All right. So aside from that, thank you guys so much. thank you for making it through the end of this video. Join the Discord, like and subscribe. I don't charge anything in the Discord. I give out free signals. I also answer questions in there. I'm not charging you anything to enter. It's all free. It's all free, guys. And before I leave, I'm gonna leave you with Philippians 4:19. And my God will supply, get it, supply and demand, supply every need of yours according to his riches and glory in Christ. Ladies and gents, God bless you. I pray that this video finds some wealth for you, and I hope and pray to see you guys in the next one. Peace.